Good morning, one and all. I'm Ravindra Rao from Kotak Securities Commodity Research Desk, and as always, I'll guide you through the commodity market insights in this fresh edition of a weekly commodity podcast. Market sentiments were mixed in the previous week as optimism of debt ceiling resolution supported risky assets, whereas rising speculation that Fed may raise interest rates again kept traders cautious. However, a moderately dovish stance by Federal Reserve Chair Jerome Powell that the US Central Bank may not need to raise interest rates as much given how credit conditions have tightened led to dollar retreat from 2-month high of 103.62. The dollar index, that is the DXY, that was cruising after breaching the 60 DMA resistance near 102.73, took a pause after hitting a high of 103.62. The greenback is now out of the previous range of 100.80 to 102.80 with last week's rise. The new range now would be 105 to 102.80 provided the US debt ceiling deal goes through. A close below 102.20 would once again make dollar weak. On the precious metal front, it was not a good week for gold bulls as the COMEX price broke below the $1974 zone after holding it for more than a month. Although COMEX gold closed the week with a 2% fall, price managed to recover from lower levels on Friday, right after Fed Powell's speech, that pulled dollar lower from weekly highs. Similar trend was seen in silver, but losses were limited to just 0.7% on recovery in gold and industrial metals in the last trading session of the week. The recent repricing in Fed funds expectation has been substantial. A week ago, markets were pricing in very little to no chance of a rate hike in June and 75 basis point cut by December 2023. Then till Friday, the CME Fed Watch tool was showing a 38% probability of a 25 basis point hike in June FOMC meeting, which is down to just 17% after the Fed chair's speech on Friday. US debt ceiling uncertainty might keep markets volatile for the week. However, once it is resolved, focus will again turn to economic data and monetary policy outlook. Despite recent hawkish comments from Fed officials, chances of another rate hike during the June meeting looks dim as majority of Fed officials telegraphed a wait and watch approach. FOMC meeting minutes, which is due for release this week, might also signal odds for a Fed pause. Also, a PC price index might indicate easing price pressures, keeping precious metal supported for the week. On the technical front, as I mentioned, the break of 1970 took the prices lower till $1954. However, there was a recovery seen on the last day of the week, and currently the prices are trading close to 1980. Having said that, 1970 still is a very good support, and if it closes and sustains below $1970, then there is a chance it might fall towards 1937. On the flip side, if the price moves above 1990, 1992, then there is a chance, or we can conclude that a temporary bottom is in place, and the prices might further move higher and once again breach $2,000. In case of silver has taken a very good support near channel support near the trend line of the channel. This upper bound was penetrated in March, and prices have witnessed a throwback from the higher levels near 26.20, and it has taken a support near the 60-day moving average and the upper bound of the channel. So if the price sustains above this, then there is a chance we might again see a resumption in silver's rally. On the lower side, support now is close to $23.30, and if that is taken out on a closing basis, then prices might further fall towards 22.80 to $22.60. If not, then we might again see a bounce back towards at least towards $24.63. Coming to energies, on the energy front, both WTI crude oil and natural gas rose in the previous week. WTI oil closed with 2% upside. First weekly gain since mid-April, supported by US debt deal optimism, supply disruptions from wildfires in Canada, and favorable demand outlook by IEA. IEA estimated world oil demand to rise to 102.01 million barrels per day in 2023, an increase of 2.21 million barrels per day from last year, and around 1.3 million barrels per day higher than the pre-pandemic 2019. NYMEX natural gas witnessed a sharp rally and ending the week with a solid 14% gains. The rally came after the inventory report that showed lower than expected build. On the technical front, crude has been taking a good support of the double bottom of $64, although it is quite far now. It is currently trading near 71.28. But that is $64 remains a very good support because of a Morningstar candlestick formation and also a double bottom. Until that holds, any dips might attract buying in crude. On the upside, there is a possibility it might move on to test 60-day moving average, which is close to $75.88. So that would be the level that bulls might be watching. Immediate support is near 69 to $68.50, which might act as a buying zone. So as of now, there might be some corrective move on uncertainty on the debt ceiling deal. But overall, on the lower side, we might see some kind of a buying coming in. In case of natural gas, M6 natural gas has given a triangle breakout last week, and it has taken resistance near 221. Now the bulls will have to take out the resistance of 221 if they want to take the price close to 240. So if that holds, 221 holds, then there is a chance some corrective move might come in because of a continuous rise for almost a week. So we might see some kind of a corrective move towards 200 odd levels, which again might attract buying. So the trend remains positive on the upside. 221 needs to be breached on a sustaining basis for the bulls to take it higher towards 240. Finally, coming to base metals, almost all base metals closed on a mixed note after hitting fresh multi-month lows as Chinese economic data largely missed expectations and sparked concerns regarding the faltering pace of recovery, thereby hurting the demand prospects. Aluminium saw gains of more than 2% thanks to sharp increase in stocks earmarked for delivery on the LME. Technically, if we talk about copper has taken a good support near 710, which is the 200-day moving average support on daily charts. Having said that, if we take a slight buffer and say if it closes below 709, 708, then there might be further selling, which might take prices close to 700 odd levels. If not, then bounce back towards 732 to 730 to 740 cannot be ruled out. So the levels to watch for in copper would be 709, 708 on the lower side. Closing below that might turn it more weak, or else we might see buying coming in at lower levels, and the prices might bounce back towards 730, 740 zones. To conclude, the greenback may continue to trade sideways as latest comments by Fed chair has led to repricing of rate expectations. Also, the week will continue to be dominated by decision on US debt ceiling. We'll get a clear market reaction only after the deal gets through. Till then, volatility might be high. With that, I come to the end of this podcast. Good luck and trade safe.